Welcome back to the Small Business Mindset. Today, I want to talk about controlling your cash flow. Now, I know this time of year we're coming into holiday season and we tend to be a little bit heavier on the spending side, but being mindful of your cash flow at all times, regardless of the time of the year, is a great way to make sure your business is set up for success. So I know many of you listening might have more of a steady paycheck, meaning you have a salary or you have a regular, every 2 weeks or every month you get a paycheck, whether it's from your employer or from your contracts or however you're set up. Other people might be more commission based, or maybe you own the company. So maybe your paycheck is a little more unstable, meaning some months are a little higher, some are a little lower. Maybe you get paid quarterly by the contract, what have you. But I think these concepts can apply regardless of how you get paid, but more just tracking how the money comes into your life and how to make sure you have excess cash flow for the times when things are a little lighter. So first of all, let's talk about time of year. In thinking about your cash flow needs for yourself, your business, and your household, and I think all of those need to be thought about in consistency with each other, because really, we work to create money for our businesses, but at the end of the day, we create money so we can pay for the things for us to enjoy in our lives. Whether it's keeping a roof over our head or food on the table or making sure we have a streaming service subscription, whatever, or travel. Whatever you love to do in life and fills your cup, those are some things we need to be mindful of as far as how your cash flow impacts that in a positive way. So I'm going to give you an example. For me, and I get this question a lot. I'm a licensed real estate broker, and I get the question, well, do certain times of the year impact your selling cycle? Yes and no. I'm in commercial real estate, and I know that is different from residential real estate. My commercial real estate doesn't necessarily go on a cycle. We don't necessarily have stronger periods and periods that are a little bit softer. It really just depends on somebody's business cycle, what their needs are in the marketplace. I do notice at this time of year, a lot of my companies that I work with are gearing up for those 2023 plans, meaning they're wrapping up the year, looking at a spending plan in 2023. But at the same time, if I'm working with somebody that is a tenant, meaning they lease space, those leases can expire at any time throughout the year. They don't always expire on December 31st. They don't always expire on June 30th. It's a rolling average, and it's just making the plan to make sure that you are accommodating their needs and vice versa. So time of the year might also impact you in your home life for a variety of different reasons. There are several things and responsibilities in all of our lives that only happen a few times a year. For example, if you own a car registrations usually happen once a year. Once a year, when your license plate expires, you get a notice, probably from your county treasurer's office, to have to go in and pay those car tags and those property taxes on those vehicles that you own. So budgeting for that and thinking about how your cash flow might be impacted, especially if you're on a steady paycheck. If you're on a steady paycheck and you have a set budget, and those little things like that pop up, it might mean a few extra dollars that aren't part of your regular routine. Also be mindful of holidays and birthdays and those special events that slip into your year. How are you thinking about your cash flow needs for that? I hope if you are somebody that has been following me for a while, you are someone that thinks about a budget for not only your business, but also your personal life. I know I use something pretty simple. I use a Google Docs spreadsheet. Excel spreadsheet is very similar as well. And I have a family budget, and then I have a work budget or a business budget. And those two are constantly getting updated with each other for exactly that purpose. I'm a self-employed person, so I'm a 1099 contract employee, if you look at it that way. And if those of you don't know what that means, we'll cover it in a different episode. But really, I have to take all the taxes out myself, and I work with my accountant team to figure out what that is on an annual basis. When I first started as a self-employed person a number of years ago, that was a conversation that scared the crap out of me, quite honestly. How do I go from my employer taking out all of those tax withholding so that way when I do file my taxes, either I break even or maybe I get a little bit back? That has totally gotten turned on its head, because now when I get my commission checks from clients after completing a deal, it is on me to make sure I take out all those taxes. So sometimes you might get a big paycheck, but after you take taxes out, it looks a little different. And it's the discipline to make sure you are managing that effectively. Because I remember the first couple years when I made the transition from an employee to self-employed. Every year when we did those taxes for the first couple of years, making that transition, it was a big amount to have to, swallow and like, okay, I'm responsible for this amount of taxes, because in the past, my employer had taken care of that. Thankfully, we're on the right track now, working with my CPA and making sure I'm managing, what my deductions average are going to be and what my expectation of taxes are. I do have to admit, though, when I do get paychecks in the form of commission, it is a discipline that every time that comes in, I am making sure and setting aside the appropriate tax allotment, so that way I don't have a big surprise at the end of the year, because nobody wants to have April 15th come around and, oh my gosh, you have to write a big fat check to make sure you're covered, and maybe you didn't plan for it. So how are you getting access to those funds? So tax planning is incredibly important. If you are a salaried employee or you take a wage from an employer base, also making sure you're managing your tax withholdings. And that is a conversation you need to have with your CPA and your employer to make sure, you're not taking out too much, but you're taking out enough. So that way those surprises don't occur. I've always been in the camp that I would rather keep money in my pocket throughout the year and have to pay a little bit, maybe catch up at the end, than having way too much taken out and then get a big refund. I think it's just a matter of what you're comfortable with in your lifestyle. I would rather have access to my cash at the time, because sometimes, you maybe be a little lighter and you have access to those extra dollars in your bank account if something comes up. Like recently I had to get new tires on my car. Well, that was $1,000 expense that I hadn't planned for, but thankfully I had the cash flow and reserves to help accommodate that. The other thing I want to talk about as far as cash flow is your emergency fund, and if you're a business owner, a line of credit. And this can even apply to you at home. I always like to have something in the wings, and I always like to think about worst case scenario. Let's say I make no money for the next 6 months to a year. That's probably not going to happen. In fact, I guarantee that's not going to happen. But this what if, and that could happen, what if I get injured or have an illness? What if a family member is in that boat and I literally need to park my business and be able to focus on that? How am I going to get the bills paid? How is our household going to get the bills paid? There are a couple ways you can approach this, and this has to do with your cash flow, because cash flow needs to be present in your life to make sure your necessary things get paid. Things like your mortgage or your rent, probably your utility bills, because no one likes to live in a cold home or in a hot home. Your phone, your internet. What are essentials? Now, some essentials, I'm going to debate with you a little bit. Some essentials might not be your streaming service. Some essentials might not even be your internet service. Who knows? Because there's other ways to accommodate that. But I want you to think about, what are those essential things, your responsibilities on a monthly basis, home and in business. What is that amount? What is that bare minimum amount to keep the lights on, to make sure you're comfortable and you are living and thriving? When you think about those emergency savings, ideally, I would encourage you to have multiple months saved away in cash in a bank account. So that way you could tap into it any time. And that's also a great platform to plan for, especially when things like new tires for your car come up, or an unexpected repair, or maybe a medical bill that comes up. You have several $1,000s, and you're going to look at your budget and determine what that looks like. I know I've heard rules of thumb 3 to 6 months. I'm going to say whatever you're comfortable with. If you are thinking, we can survive 2 months without a paycheck, then maybe that's your goal. But maybe you think, gosh, we can't survive 2 weeks without a paycheck. Maybe that cash reserves needs to be a little bit bigger. But line of credit is also something that I've utilized throughout my life and career to create that safety net and create that cash flow I could tap into if I needed it to be. And that line of credit looks like several different things. One line of credit that we've utilized in our life is a home equity line of credit. Now, we are homeowners, and throughout time, we built up some equity in our home. Having a conversation with your mortgage broker, wherever you got your mortgage from, or quite honestly, any financial institution that offers mortgage lending, can offer you a home equity line of credit. This might require you to get an appraisal on your home if they don't have a current one on file. And then it's a matter of talking through, okay, how much money, first of all, how much equity do I have in my home that I could tap into? And you could tap into it for a variety of reasons. You could tap into it because you need a home repair, whether that's a, kind of a want versus a need. Maybe you want to do some remodeling that's more cosmetic, or maybe it's a have to, like we had to do this year. We had to replace some of the stucco on the front of our house because there was a shifting going on for some settling. So, think about where you're going to have the funds to come for that. The way home equity line of credits work is that typically, and talk to your financial institution about those specifics, they have an interest rate, but it is variable and it varies with the market. The way we have our home equity line of credit set up is that as we draw on it, so as we need it, then the interest rate kicks in and we have a minimum payment every month. And it's usually a minimum or a percentage of what you've drawn from. So for example, if you have $25,000 in equity in your home, perhaps the minimum payment is 1% or $250 a month. That's just an example. Please check with your financial institution about those parameters, but that's what that could look like. So $25,000, for example, could keep you afloat during those, lower moments of your cash flow or of your income earning time in your year. If you are a business owner, I highly suggest, as you're setting up your business checking account, hopefully have a business savings account as well, because that's also a great way to park some funds, but also talking with your accountant. How do you structure your accounts to make sure they're in the right account? Meaning, how is your entity structured? How are you protecting those assets in case something happens? In a business sense, there also is line of credits that you can attach to your business. And that's also a great conversation you can have with your banker. I have a line of credit at a bank, and it's only $10,000 to $15,000, but it is there for those what if moments. And so if I think about throughout my financial life, I have different pockets of income and credit opportunities I can tap into just in case. I've been able to build up over the years, and this is great through making sure I have good credit. I'm paying my bills on time, so I have access to those funds. I have enough cash in savings, but also through lines of credit that I can pay for my income for a year. If I really needed to, if the worst thing happened and I needed to pay for something, I could tap into those lines of credit, which gives me a lot of comfort. So thinking about your cash flow and thinking about what that really means to you, I think it really just means, emotional stability, mental stability, and it allows you to do what you do without having to worry about money. I don't mean to say that you should stop working and just rely on those credits, because you're going to have to pay that back, most definitely. But more importantly, it's about giving you comfort and peace and making sure that you don't have to worry about those moments when a commission comes in a little later than expected, or a closing gets extended, or maybe that contract didn't come through, or your client that's supposed to pay you, they had 30 days to pay while they asked for an extension on it, or maybe your company is furloughed or there's some layoffs. Who knows the situation? It's always making the plan for what does the cash flow need look like at any moment in time during the year. I now want to talk about shifting gears for a second. Let's talk about your expenses, because this is a really easy way to identify additional cash flow within your life. As much as I hate to say it, it's always great. Monthly, I take a deep dive into my expenses. And this could be anything from making sure you're combing through your credit cards. So if you use a credit card, and a lot of us do, I use credit cards as a way to track my expenses, especially from a business perspective. So that way monthly I get a statement and I compared that to what I spent. I have another track record of what is happening in my financial life, so I can make sure and document it for deductions. But most importantly, and that goes into a spreadsheet or a financial program. So that way I understand, okay, how much money am I really spending on meals with clients? How much money am I spending on marketing? How much money am I spending on subscriptions or continuing education, or you name it? It kind of gives you a really great snapshot of what that all is. And in looking through your expenses, and I hope if you have a credit card, and I'm sure you do, that you are opening up those statements every single month, and you are making sure to identify, okay, are these expenses, first and foremost, expenses that I made myself? Are these expenses something that I anticipated? Or is it, I totally forgot about that? Even things like, and I know I bring up streaming services a lot, I feel like streaming service is almost like the new, gourmet coffee run every day. If we think about, our Starbucks purchase and how that cost of a cup of coffee has gone up, and if you think about just some basic expense, trimming, what that looks like. I think nowadays, a lot of people, one easy way to trim some expenses is really identify your subscriptions to streaming services and your subscriptions to other types of things, apps, music, fitness things. I mean, take a broad look at what that looks like. I bet you'll be surprised literally how much money you spend every month on those monthly obligations. And I encourage you to ask yourself, are those monthly obligations something that you can cancel at any time? So they're only a month at a time. And I know one trick that I've used, if I have a streaming service, you're like, oh gosh, I really want to watch that show, or I want to watch that movie on that streaming service. Sometimes I might subscribe just for 30 days and then I cancel it. And then if I want to, I plug back in and do it. I mean, I realize sometimes it's $5 a month, $7 a month, $10 a month. But if you layer that on with multiple subscriptions, that might mean $100 a month. And so it adds up really, really fast. If you're really taking a deep dive into your cash flow, make sure you know how the money is going out of your life, just as importantly as the money coming into your life. I also want to talk about efficiencies within your business. Are you thinking about how you earn your money and how efficient you are with what it takes to earn that money? Meaning, what it takes wardrobe-wise, what it takes gas-wise, what it takes networking-wise. What are all those elements that get plugged into your life, and do a deep dive evaluation? I know I'm a member of a lot of boards and clubs and networking groups, and I am constantly evaluating them, and it happens more on an annual basis. I'm evaluating them. Okay, what impact do they have for me? Is this a personal passion? Or is this truly a business initiative? Does it provide me with extra business? Because all of these come with some sort of a financial obligation, whether it's an annual membership in the club or the group, whether it's a meal expense. It might be a philanthropic donation. Because of my service on this board, the expectation is that I do make a donation. And so I want you to identify those. I'm not saying that every single group you belong to has to provide you with a expected ROI, meaning a return on investment. So if you spend $100 a year belonging to this networking club, do you get $100 back? It might not be dollar for dollar, but you have to really think about the impact of that. The other thing I want to think about when we talk about cash flow is time, because the time value of money is something that is hard to quantify sometimes. But if you really sit down for a minute and you're listening to this and you're like, okay, I'm going to make a plan. I'm going to find out where my cash flow comes from. I'm going to really understand my finances and my budget for that. And maybe you had a great year. Maybe your income was higher than expected. Is that going to continue into next year? But if we think about planning for these things, the name of the game here is to make sure cash is king. You have liquid assets that you can tap into at any time, because stuff happens, stuff happens. And the last thing I want you to do is be in a position where you're operating out of fear and you're making decisions based on fear, and you're not being the amazing, authentic self you are, and being opportunistic with yourself and your business endeavors. So I hope this gave you a little bit of tools and tricks to make sure you're able to control your cash flow now, and especially going into next year as you're doing your planning.